The upcoming U.S. elections have created massive uncertainty across the global financial markets, and one of the assets drawing the most attention is Bitcoin. With Donald Trump's return to the political spotlight, many investors are asking the same question: is it a good time to buy Bitcoin, or is it safer to wait? The answer depends on how the markets interpret the possible outcomes of the 2026 political and economic landscape. Trump has made several statements in recent years about cryptocurrencies. While at one time he expressed skepticism toward Bitcoin, his recent tone has shifted. His campaign has quietly acknowledged the importance of blockchain innovation, digital assets, and the role of private investors in shaping the next era of finance. Some of his advisors and business allies have even hinted that a pro-crypto policy could attract younger voters and entrepreneurs. If such a policy were implemented, it could create a new wave of optimism in the crypto market. A government stance that recognizes Bitcoin as part of the financial future could bring legitimacy, encourage new capital inflows, and even push institutional adoption forward. For Bitcoin holders, this would be a clear bullish signal. However, the situation is far from simple. The U.S. economy remains under pressure from inflation, growing debt, and international tensions. If the government tightens monetary policy to stabilize the dollar, Bitcoin could face short-term corrections. On the other hand, if spending increases or geopolitical risks rise, many investors might turn back to Bitcoin as a hedge against uncertainty. Historically, election periods have been volatile for all markets. Stocks, bonds, and even gold tend to swing unpredictably as new policies are announced. Bitcoin, being a global and decentralized asset, often reacts faster than traditional markets. If Trump's administration were to reduce regulation or favor innovation in digital finance, the effect on Bitcoin could be immediate. But analysts also warn of overconfidence. Some financial experts believe Bitcoin's biggest challenge isn't regulation but liquidity. If interest rates remain high, risk assets like Bitcoin could struggle. Yet, in the long term, many believe that political shifts in the U.S. will not stop the global adoption of decentralized currencies. One of the most interesting factors is the relationship between public sentiment and Bitcoin's narrative. Trump's political base includes many small investors who distrust traditional institutions. This group has historically been drawn to Bitcoin's promise of independence and sovereignty. If the next election cycle amplifies that sentiment, Bitcoin could benefit indirectly, not from government policy, but from mass psychology. At the same time, institutional investors remain cautious. Major U.S. funds and banks are still waiting for clearer regulatory frameworks before committing large amounts to crypto. If Trump's team delivers that clarity, Wall Street could finally move in more aggressively, driving demand and potentially pushing Bitcoin to new highs. The key, as always, is timing. Buying Bitcoin during high volatility requires strong risk management. For those with long-term vision, the next election could be an opportunity rather than a threat. Bitcoin has survived wars, collapses, and political turmoil before. It has always emerged stronger when global trust in fiat systems weakens. In summary, Trump's influence on Bitcoin will depend not on his personal opinions but on the broader policies his administration enforces. If innovation, decentralization, and financial freedom are encouraged, Bitcoin could thrive. If control, restriction, or protectionism return, volatility could increase sharply. For now, Bitcoin remains what it has always been, a bet on the future, beyond politics, beyond borders. The U.S. elections may shake the markets, but Bitcoin's destiny lies in the hands of those who believe in it, not those who govern it.